Hello, it's Friday the 23rd. I'm FX Plu and this is the market brief. So we have PMI data for the UK services and manufacturing sectors today. This should show how strong a recovery has been since the economy started to reopen. Forecasts suggest a significant rise for both sectors, but given the 80-20 weighting, the services PMI carries much more significant, and luckily is forecast for a bigger rise anyway. Hiring plans also look pretty positive, which could be a significant factor for the Bank of England, as fears do still remain of an unsavoury economic reality setting in after the pent-up demand has dissolved. But with hiring plans being heavily correlated with future orders, particularly in the heavy industry sectors, this is an indicator of a more sustainable recovery, which may mean the MPC don't need to use negative rates. Fingers crossed there. We also have retail sales data out today, which is expected to show a nice improvement. However, we'll have to wait until next month's reading for it to cover the April 12th reopening, which will see the most significant increase. We do still expect it to be a step in the right direction today, though. In the market, the recent sterling rally has consistently failed to challenge the 140 level against the dollar, and the direction shifted yesterday. Sterling fell to a low of 138.25. We opened slightly higher this morning, around 138.50. Over in the US, the recovery continues to grow in strength, but the housing sector is beginning to run out of steam. As the administration's stimulus pushes many asset prices higher, major price increases that have been seen across the housing market have seen potential buyers put off, and the valuations may have reached an inflection point. Commercial real estate, however, continues to rally. That's obviously following a bigger slump during the COVID lockdowns. But growth created by the stimulus package has given a boost to most areas of the economy now, and hotels and airlines and other ancillary services are now reporting record sales. Weekly jobless claims are also beginning to show a level of consistency that has previously been missing. That data point fell again yesterday to 547,000 new claims, while importantly the 4-week average also fell, suggesting a positive trend. As Biden is approaching his first 100 days, he looks to have done largely the right things. His approval rating remains just below where it was when he was elected. And the dollar index saw a bit of a rebound from recent lows. And with successive daily closes above 91.20, it looks like a short-term bottom is now in place. Who misses? Market focus is shifting towards the FOMC meeting this week. The hope is that we'll get the next update to their plans to tackle inflation, but that would of course need Powell to play ball with the details, so we'll just have to wait and see. Meanwhile, euro dollar pulled back in reaction to the stronger dollar, and we saw support tested at 120. We did recover from a low of 119.95 though, and we opened this morning around 120.25. So that's it from me, capping off a nice week in the sun. I hope you have a great weekend. Do join me again on Monday.
If you do not have a clue, then just tweet through and ask FX Blue.